analyst is a professional who assesses the creditworthiness of individuals, businesses, etc. and determine their ability to repay the debt or loan on a timely manner. A credit analyst uses various pieces of information, including tax returns, financial statements, and other related data to make recommendations to lenders on whether or not to approve credit or loans and at what terms and conditions. Now, what is a creditworthiness and how do you measure it? Creditworthiness means to understand if the borrower is worthy enough or does he have the eligibility for taking the requested loan or not. Now, how you measure creditworthiness is based on two things. First one is the ability of the borrower. Does the borrower has the ability to make the repayment in a timely manner or not? The second one is the willingness of the borrower. Despite having ability, does the borrower have intention or willingness to make the repayment? Basically, there are two types of credit analysts. Firstly, the retail credit. If an individual is seeking for a loan, it is called retail loan. Examples of retail loans include home loan, credit card, personal loan, gold loan, vehicle loan, etc. Then comes the corporate credit. If a firm or a company seeks for a loan, it is called corporate loan or commercial loan. Examples include working capital loans like cash credit, overdraft, letter of credit, bank guarantee, term loan, etc. etc. In case of commercial credit, though the process of determining the creditworthiness of the borrower is basically the same, it is, however, a little complex and advanced compared to the retail credit. To understand the ability of the corporate, the credit analyst basically would understand the business, financials, and management profiles of the corporate. He will do a detailed analysis and understand the strengths and weaknesses in the business model, including competitors, suppliers, customers, products, etc. On the financial front, he will deeply dive into profit and loss, balance sheet, and cash flow statement and ascertain if the corporate has the ability to repay the loan or not. Let me explain you this by an example. In case someone approaches a bank and requests for a home loan, then the credit analyst in the bank would start working in ascertaining the creditworthiness of the borrower. To understand his ability, the analyst will review the borrower's salary slips and income tax returns. He will check the borrower's account statements and review his expenditure and other loan repayments if any. To understand his willingness, the analyst will review the borrower's track record, his earlier loan payment history, and his CIBIL score. Combining both, the analyst decides whether to approve or reject the loan.